This one's for all my roofers out there. Two homeowners can have the exact same damage, same storm, but have different coverages. And one's gonna end up getting paid out with their roof, and one's gonna be left holding the bag a little bit more than they would like. Today, we're gonna talk a little bit about actual cash value with the roof replacements versus replacement cost coverages and what those mean, why one's better than the other, and why insurance companies are kind of moving towards where most of them are paying out on actual cash value instead of replacement cost coverages. This hits a lot of home for me, especially literally right before I sat down here. I had a client call in and say, hey, this policy's $500 a year cheaper, and it's an actual cash value roof settlement. So that's why we want to talk about it today. Today I'm going to explain in plain English what RCV versus AC means and tell you what to look for in your homeowner's policy when you're looking for it, just to make sure you know what you've got. Part one, replacement cost coverage. That's the biggest thing that I talk to my clients about, is making sure they have replacement cost coverage on the home, your personal belongings, and the roof itself. That is there to make you whole again, minus your deductible. So if you have a $25,000 roof and it's a $10,000 deductible, they're gonna pay out the $25,000 and you're gonna pay your $10,000 deductible. It's there to make you whole. The short version, replacement cost does not factor in depreciation, and that's what actual cash value is. So we'll talk about that next. So what is actual cash value? Actual cash value, or ACV, is very different. What they are looking at is just like a car. They're gonna depreciate that roof age based on claims, storms, age, wind, granular loss, all kinds of things that go into it. This does help the insurance companies out because they get to say after so many years there's a percentage that they're going to take off, or they can just value it based on their inspections and what they see there. But typically they have what's called a scheduled roof replacement on there based on age and material type for Texas specific. But really what they're going to do at this point is, let's say your roof is $25,000 and you've still got that 10% deductible, so they're potentially paying out $15,000 there, but you're still going to lose some of that depreciation, which could be 3, 6, 9, 12, 15, 18%, depending on how long you've had that roof. And so it's really not paying to replace the roof after your deductible. It's there to replace the depreciated value of the roof. So that's a very, very different coverage come claim time, when you're left paying more than just your deductible for that hell claim. Let's make the numbers really, really simple here. If you have replacement cost coverage, you've got your $20,000 roof, subject to the terms of your policy, subject to your deductible, and they're going to pay out the rest. With actual cash value, you really can be holding the bag quite a bit more, because if your roof is 15, 20 years old in Texas, that roof is priceless. Priceless is not a good thing when it comes to roofs, because that means they're not going to pay out very much at all. And so sometimes if you have an actual cash value roof, it might as well be something that you're paying out of pocket completely for, because if it depreciates more than they're going to pay out, you're going to be paying for that roof out of pocket completely on your own. Don't be surprised by something like this. There's a lot of companies out there that are doing replacement cost coverage, and there's also a lot that are doing actual cash value. So you definitely need to ask about scheduled roof payments on your roof, and to make sure you're knowing what they're doing and how they're depreciating it, or if you truly do have replacement cost coverage on that roof. Something else that's really important is we don't want you to confuse depreciation and your deductible. The deductible is how much of the risk that you have to take on in the event of a claim. Depreciation is going to take off how much you're potentially going to get back once that claim is filed. With an actual cash value roof, they're always going to factor into depreciation, and you're still going to pay your deductible. Replacement cost, they're going to get that initial check typically, and then you're going to get depreciation back post-claim in the form of paying the remainder balance of that claim. What also can happen is most people do kind of confuse the two and think, hey, I'm just going to pay my deductible, and then even if I have actual cash value, it's going to cover it. That's absolutely not the case. The actual cash value really will lower the amount the insurance company is going to pay out for you, and that's where you want to make sure you know the difference, because that is a big mistake as your roof gets older. Is kind of just the only way of saying it. So that 12 to 15-year-old roof, again, it is priceless and is not good when it comes to insurance claims. This conversation matters everywhere, but especially here in Texas, where the majority of our claims are wind, hail, or tornado related, or hurricane down there on the coast. So you definitely want to make sure you're paying attention to that, because just because it's a certain carrier, carriers can offer different types of coverages and the policy look the exact same on the base level when things are sent to you. So making sure you're asking that question, whether it's ACV or replacement cost or actual cash value or RCV, all those terms are kind of interchangeable, but also there are things that you want to make sure you're looking at that just definitely have to deal with the roof payment schedule, or that's how they're going to pay out, which is that actual cash value. So just making sure you're looking on those things. Every carrier can be the same on the front and how they look. It's the back end stuff that's going to matter more. That can be a huge thing. If you're just focused on price, I almost guarantee that agent is going to offer you an actual cash value roof. So you want to make sure you're doing that. So the lowest premium is not always going to be the best thing. Definitely just talk to a client about a new build, and where I think the actual cash value is about $400 a year cheaper on the homeowners insurance, but that roof depreciates faster than that savings. So you want to make sure you get that replacement cost coverage so that at claims time you come out ahead, not behind. So imagine that I show you two policies. Policy A is $2,000 more expensive. Policy B is $2,000 less. But which one's better? If one's got actual cash value and one's got replacement cost coverage, it depends on the age of your roof, honestly, and how much you're willing to take on as far as the risk goes for the savings. The conversation is different for everybody, and it's something that needs to be had more often, and not just said, hey, here's the price, do you like it? Let's focus on cut price. No, the reality is we need to focus on coverage to make sure that you're getting the right coverage for the right price for your situation, not just the cheapest policy that's out there. Actual cash value is almost always going to be cheaper if you're at the right carrier, but it doesn't mean it's right for your situation. I always lean on talking about replacement cost coverage with my clients specifically, because that is something that I feel like is important and it's still available out there in the market today. So what do homeowners need to do? They need to take a look at their declaration pages and they need to ask questions. Does it have actual cash value or replacement cost coverage? Does it have a roof endorsement or separate roof things related specifically to the roof that need to be asked? What's the deductible? What is the depreciation? Is it recoverable or not? Things like that definitely need to be asked because you want to make sure you're getting the right coverages, that at least you know that you're taking on certain risks that are potentially going to pay out less come claim time. Really, you need to talk to your insurance agent or an insurance advisor who knows what you've got going on, is able to explain it to you, and able to break down the roof payment schedule or the replacement cost coverage for you in the event of having a risk. A couple days ago, someone brought to me a 3% deductible on $1 million home. Their roof, the way that their home is designed, they are basically self-insuring that roof, and they had no idea that they were going to have to pay for that come claim time 100% out of pocket because the value of the roof is less. That's the things you kind of need to know when you're about to file a claim or trying to change insurance. So I was glad that we had to have that conversation, and I kept her from filing a claim because she didn't understand what she had taken on with the risk in her policy, the way that she had it set up to save $1,500. That's probably going to cost her about $10,000 a year, or not $10,000 a year, but $10,000 on that roof claim had she kept that lower deductible, but instead she switched it. Things that we have to talk through. Wish I could have had that conversation with her and advised her differently. This is what insurance shopping around should look like. Yes, every agent wants to have the most competitive pricing, the lowest premium, so it makes an easy sell. But what we don't want to happen on the back end is to sacrifice coverages along the way and find out come claim time. It's not if a claim happens, but when it happens, that you find out that, hey, yeah, I saved $500 a year, but I lost coverage and now it's not going to be something that's covered. So the conversation really needs to be both ways. Talk about price, talk about coverages, and talk about what we're losing along the way to lower that premium. And that's what things need to happen every time. It's same thing for home insurance, auto insurance, umbrella coverages, you name it. There is a risk and reward that insurance companies take and you as a client take when that premium goes lower. The insurance company typically comes out ahead the lower the premium because they are taking off coverages to get you there. As an agent, my job is to make sure that you are properly insured and you are getting those questions answered and you are finding the right coverages that fit your budget and your need for everything. So just making sure that we're looking on those things and answering the right questions along the way. We don't want to find out come claim time that you didn't have something that you thought you had and that we didn't talk about it for some reason. So that's why I try to be focused on education and details along the way with that policy for you. If you have no idea what kind of coverage you have, it's time to check it out. Go in there, find your declaration pages. You either call your current agent or pull it out online. You don't want to find out in the next round of Texas hailstorms or windstorms or hurricanes that you had coverage or you didn't have coverage that you thought you had along the way. If you like this content, if you think it's helpful, like us, subscribe, follow us on the Brawley Insurance Breakdown on YouTube, but also just give us a like right here, give us a share. We are 100% referral based is one thing that I always kind of remind people, and that's one of the things that we're able to help more people. The more you share us, the more you comment, the more you like, the more our reach grows. So how you can help us out, like, subscribe, comment, heart, anything, thumbs up, ask questions. We are here to help. We are trying to educate y'all on insurance and trying to make it just a little bit easier to understand. Hope you're having a great day. Brawley Insurance Breakdown. Gig 'em.